It's hard not to feel concerned about money matters at the moment. Mortgage payments for so many are increasing, petrol prices are on the rise, as is of course the general cost of living. So what exactly is ahead of us financially? I thought we'd ask that question of Chief Investment Officer at Motley Scott Phillips tonight. Scott, good evening. Are things as dire as they seem? Should we start preparing for a recession?
Pete, good evening. That's a really important question, mate, and one we really should spend a little bit of time on. I think the reality is that is a very decent possibility, but probably at this stage not a probability of a recession. In other words, there's a chance because most of the rest of the world will probably go into recession if they're not there already in the next 3 to 6 months. The Australian economy is actually still growing reasonably well. You know, GDP growth has been good, retail sales have been up, unemployment remains low. So we're going into it in a really, really nice position. But as you rightly point out, mortgages are going to continue to be more expensive over the next 6 to 9 months. We have to be ready for that. And inflation is not going away anytime quickly. So look, if we're lucky, we get away without a recession, without a spike in unemployment, and hopefully with temporary interest rate rises. But it is going to be a tough next 6 or 9 months, and we do need to be prepared.
All right, well, consumer confidence figures play into all of that. They'll be released this week. What do you think? Will we see the current financial fears reflected in those figures?
These actually will be fascinating, Pete, because consumer confidence got worse a month or so ago, and then it's been getting better since. There is a sense that we're making our peace with what's happening in the economy. So whatever buyer's strike might have been about to happen seems to have been abated for now. But of course, as you say, even as the RBA has said, the continued, month after month rise in interest rates will eventually start to bite. Whether that shows in consumer confidence this week or not is an open question. But as you know, that consumer confidence number is probably the most important leading indicator of what will happen in the economy. If we keep our wallets and purses open, that's great news. If we start to close them, that is a sign of what's to come.
You mentioned the Reserve Bank. I think there's so much interest on the Reserve now in terms of their reasons for these hikes, and the minutes of the board meeting will be released this Friday and hopefully give us more of an insight into what they're thinking about the economy, not only here in Australia, but do you think they might give us a global perspective as well?
Yeah, I think they will, and that's actually a really important one. You just asked about the chances of a recession. If we do have one here, it will be a globally led recession. So that international outlook is going to be super important. They'll tell us what they thought, what they were thinking, of what data was presented at the board meeting. Most importantly, too, we know this one was going to be, for most people, a 0.5% rise, end up only being 1/4%, and a lot of mortgage payers saying thank goodness. But the reasons why and the balance of what they might think moving forward will be hopefully not revealed. They'll never be that clear, but we'll have some signs of what they're thinking for future rate rises as well.
OK, and before we say goodnight, Scott, what are we looking like tomorrow when our market opens?
I wish I had better news for you, Pete. The good news, if there is any, is the US market fell pretty heavily on Friday night, our time, more than 2%. The All Ords at the moment going to open down about 0.9%. So it will be a loss, but the good news, not quite as bad as happened in the US on Friday.
Always terrific to get your insight, Scott. Thank you so much for joining us, as always, on The Late News.
You're very kind. Thank you, Peter.